Hello everyone, welcome back. This is K from the Black Box. So today we will see gold on 6 months time frame. As you can see, we are on the 6 months time frame, and we will see every uh, entry we got with the black box. Okay, as you can see, gold on 1960, around 1960, it started to consolidate, as you can see it. So finally it broke out, and as you can see, this is the height of the box right here. So that would be your TP1 right here. Okay, that would be your TP1, and you would place your stop loss above there, above your entry, after resisting has hit your TP1, and let the other half of your trade to run. Okay, we are talking about not, I'm not telling you to trade on the 6 months, I'm telling you to trade on the 4 hours and the 2 hours. If you are a swing trader, this thing will happen. Surely this thing will happen, and you'll see that. Okay, you'll see it. So the same thing applies, whether it is on the 6 months, whether it is on the a yearly time frame, whether it is on the 4-hour time frame, whether it is in 1 minute time frame, whether it is in 1 second time frame. This thing happens. Okay, this thing is universal. The black box is everywhere. So as you can see, this thing broke TP1 right there. All right, and half of your profit would be out right there, right there. And stop loss above, it was below there. Before it was below, and then after it hit your TP, it is above zero. Okay, and then you wait for TP3 to beat. After TP3 has been nailed, you trail halfway, stop loss halfway, and then halfway, and then halfway. Okay, do not trail it too close, because as you can see, this thing moved a lot, and it broke out in at 35,120 and reached 35,800. That is a huge move. That is a huge move by itself. If you measure, that's a lot of pips. Okay, as you can see, that's a lot of pips. That, as you can see, is 70 pip. I mean 70 ah 70 points. Okay, 70 points movement, and that is huge, and no joke about it. No joke about this is a commodity, so uh, you don't measure it in pips. So a point is very huge. It is very huge. So this is was the first setup, and next let's come back to the next setup that we would get. Okay, as you can see, this year there was nothing. 1966, 1968, there was nothing. Actually, there was up there was the black box again. Let us measure. I mean, let's put the black box right there. As you can see, that thing is trade stopped, and the fourth candle broke out. As you can see it. Okay, the fourth candle broke out. But before it was trending, it was moving up. It moved up, and this thing it moved up. Okay, but this thing consolidated sideways. Okay, they are sideways. And as you can see, the same thing applies. What you're gonna do now is you take your first TP. First TP will be the height of this box. So you can see the height of this is a huge bar by itself. So the first TP would be around zero, okay? And third TP would be around zero, right? A little bit up there. Then stop loss will be up, trail up, trail up, trail up, trail up. Okay, don't touch that thing until that thing retraces and gets you out of the trade. Don't touch that thing. Okay, don't touch it. As you can see, this thing moved a lot, and a lot, I don't know, almost 500 or more points. Okay, as you can see, this is a huge breakout from this consolidation by itself, from this black box by itself. Okay, and next, what did we get? Nothing. We got nothing, as you can see. There is nothing here. Only two candles. This thing actually traded down. So what you're gonna do in here is you're gonna place your black box up there, just like this. Okay, just like this. Actually, what you're gonna do is you cover everything right there until the 70% is covered. Okay, and this thing also. So the fourth candle would break out. As you can see, it's the same thing. Why I consider this a black box? Because this thing traded below the 50%. As you can see, if you can use the Fibonacci, the bodies, that is 23% right there what you are seeing, which means this thing traded below the cheap level below the 50%. That's what we want. Okay, that counts as the black box. Right, as the black box. So the same thing applies. So what you're gonna do is this is this will be your black box. Your TP will be where? Up there. TP3 riser, stop loss up. TP1 hit, stop loss up. Then trail it, trail it until this thing retraces like this one. Okay. This thing will surely get you out of the trade. This thing will surely get you out of it because this thing traded up. You trailed it halfway and this thing traded down, then moved up. Okay, look where it moved. That is 875, big number. 850, big number. Okay, the next setup we got was around there in 19 gold in 1989 and in 1991 gold consolidated around here. So you place your black box as always. So you can see this. You place your black box. So what happened? This thing broke out. Right there, you enter a sell, right? So this thing retraced back, retested, and moved to your TP. Eventually, your TP is down there. As you can see, your first TP would be the head of the box. Down here, and then this thing moved more than TP2. This thing didn't hit the TP2. So what you're gonna do is you trail your stop like I told you. After TP1 has been hit, you trail your stop down. Okay, so you wait for this thing to move further, then you trail halfway. So after that, then this thing will get you out of the trade. As you can see, this is a huge black box by itself. Okay, and then if you missed that one, and again in 1996 gold consolidated again here, right here. Okay, consolidated and made the black box, and your first TP would be down there, right there, down there, where at 320 level. Okay, and then stop loss down here below your entry. So if the market comes back, you don't care, you don't care. Then this thing smashed down, then this thing possibly went to TP2. Yes, TP2 was hit. As you can see, TP2 was smashed at exactly 250, 60, around 260 level. So after that, this thing consolidated a lot and possibly hit your stop loss by this week. Okay, you will be out with profit. This is the third setup on gold that we got. The fourth setup started here, right there. What you are seeing is gold consolidating around January 2001. Okay, around 2001. Then this thing broke to the upside, as you can see it. This is a nice black box, as you can see it. Then your TP1 would be the head of the black box. So This is it, up there. And then that candle will get you out of the trade at 380 US dollar right there. And then stop loss up there, okay? Stop loss will be up there. And you let the other 50% run. What is half of your trade? So as you can see, TP3, you wait until TP3 is hit. After TP3 has been hit, what you're gonna do is you trail it to close. You can trail it to close. As you can see, no more pullbacks. But right here, it pulled back. So as you can see, this thing pulled back a lot. So what you're gonna do is you trail it, don't trail it to close, okay? Don't trail to close halfway as I did. I didn't trail to close on euro dollar. I bought euro dollar today, and that thing moved a lot. I didn't trail it to close, and the advantage is to give a room to breathe, okay? To give the market a room to breathe. As you can see, this thing uh, will get you out of the trade eventually, because you thought that this thing moved up, so the pullback could be around here, and then after that you do not anticipate this candle being formed, okay? So your stop loss would be there. That is good. That is a good placement, and then this candle will get you out of the trade, as you can see. I've seen these kinds of things being formed on dollar, yen, and other currencies, and it is crazy. It is crazy. I don't know why they do this. Maybe they want a cheaper price before they move further. As you can see, they moved it to heaven. They moved it to heaven, to the sky, as you can see. That's a huge move by itself. Half of our trade right there. So you can see, don't trail it to close. 50% is already out right there. So what is the point of getting out early? Okay, don't get out early. Don't panic. There's no panicking. On the next setup, we got around there in 19. I'm sorry, in 2009 July, gold broke out this thing. So that is where you enter right there up there. You enter a buy. Your stop, your take profit would be where? Right there, above there. Your TP1 would be right there. This candle will get you out of the trade. And you wait for TP3 hit and 50%, okay? You don't touch that 50% until TP3 is hit, okay? So 50% out at TP1, and let the other half of your profit to run for TP3 and more. As you can see, this thing moved and moved. This thing moved halfway. This thing moved halfway. This thing moved halfway. This thing, then it consolidated right there. So you don't touch it. Right there, your stop loss will be right there. Don't touch that thing, and this thing would smash you out of the trade. So that is it, guys. That is it. Right? TP4. If you want, you can get out at TP4. Right? So that is a trade in 2010. The fifth black box formed exactly in 2013. And gold formed the black box in 2013. So that black box is where? Right there, exactly right there. So what happened here is that this thing traded down. This thing traded down. You enter the sell right there, then immediately change direction and move back at you. So in this case, trailing your stop has a benefit right here, okay? So what happened here is third model happened. What is that? Single fake out. Single fake out happened, okay? What is a single fake out means, as you can see, this was the first black box. And what happened is it broke the downside, faking you out as single fake out right there, forming a single fake out, and then went up to its intended direction, moved up to its intended direction, right? So um, So if you didn't trade your stop loss around when you were in profit already, then you would have paid the trade. I mean, the trade would be disastrous because of the stop loss would be hit around there, and you would enter another trade because I told you to not enter more than 2 times in one setup. This is one setup. This is the setup, not this one. This is the setup. You sold. Then when this thing breaks the upside, then you bought again. That's two. So you buy that thing, the same thing applies. Okay. The 8 of this box, TP1. As you can see it. This is your TP1 for the setup of gold in 2017, right? So in 2019 it broke. It broke. And then TP1 will be hit by the third candle, and you wait for TP3 to be hit. So in this case, this is TP4 right there. How convenient is that? At TP4, this thing started consolidating, coming back down, as you can see it. So at TP4, this weak formed and smashed it down. That's crazy. That's crazy. That's crazy. And your stop loss would be up above there once that thing moved, and that thing moved above more. So this thing would get you out of the trade. If you trailed too close, then you would have benefited as this because this thing would smash you out of the trade. There more profits, okay, more profits. But most of the time, don't trail too close. Don't trail it too close. That is enough. You want more profits, right? So you gotta be loose on it. Gotta lose on it. Stop loss. I mean, the stop loss should have some gap so the market can pull back and move further. As you can see, this is the sixth setup of gold on 6 months time frame. The next thing that we got was around here. As you can see it right there, we formed what the black box right there. Okay, as that is the whole thing. That's the whole thing. Maybe this thing encompasses everything, as you can see it. This is the black box by the whole thing right here. So as you can see, what happened here? We got a break in both sides, which means what? Which means this is what the fourth model. This is the fourth model. Okay, this is the fourth model. If what happens if that thing comes back and breaks down to 1600 right there, 1600, yeah, level from 2000 right there. Okay, if that thing breaks down, that is the fourth model, and we enter a sell. We will enter a sell on 6 months time frame. Maybe that would happen in 2027, 2028. We would have to wait and see, right? So the 6 months time frame, that's the scenario. But if that thing moves up and up, that is a third model, single fake out. So we would be buying more and more. Okay, that is the scenario for gold 6 months time frame. As you can see, the setup is still running on 2023 and 2024. So there is nothing in here. Okay? There is nothing, absolutely nothing here. Okay, maybe if you compress it down here, down there, then you would assume that this thing has already broken out to the upside. So which means we would be looking to upside potential, some upside potential. So on the 6 months time frame, how much setups did we get? Right there, you don't even see that thing. Right there, one, right there, two setups, then three setup, 4, 5, 6, 7, and 8 setups on the 6 months time frame. What? One, right? Oh, we got 1, 2 right there. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 setups on the 6 months time frame. So next we will see, we will explore on the 3 months time frame, and it will be worth it. I promise you, you will learn everything. You will see what the black box has for us. Okay, You will discover some powerful secrets that will change your trading game forever. It will change it forever. You just just watch the videos and you will see what I am talking about. Alright. So this is a 6 months time frame. Next time I'll see you on the 3 months time frame gold. So thanks for watching.